Ah, real estate. It's the dream, isn't it? Owning a piece of the pie, watching your investment grow, and securing your financial future. But when it comes to North America, the age-old question arises: Canada or the USA? Both countries offer enticing opportunities for real estate investors, but understanding the nuances of each market is crucial. Canada, with its stable economy and welcoming immigration policies, has long been a haven for real estate investors. The USA, on the other hand, boasts a vast and diverse market with the potential for high returns. So, which country reigns supreme in the real estate arena? Let's dive into the details and uncover the pros and cons of each market, empowering you to make an informed decision. Whether you're a seasoned investor or just starting, this comparative analysis will equip you with the knowledge you need to navigate the exciting world of North American real estate.
Canada has earned a reputation as a safe and stable haven for real estate investment. The Canadian market is known for its steady growth, though it may not experience the same rapid price appreciation as some segments of the U.S. market. This stability can be attributed to several factors, including a robust banking system, well-regulated markets, and a consistent demand for housing. One of the driving forces behind Canada's real estate market is its welcoming immigration policy. Canada welcomes a large number of immigrants each year, many of whom are looking to settle down and purchase property. This constant influx of newcomers creates a consistent demand for housing, contributing to the market's stability. However, it's important to be aware of the foreign buyer taxes in certain Canadian provinces. These taxes are designed to cool down the market and make housing more affordable for residents. While these taxes can impact your initial investment, it's essential to remember that Canada's long-term growth potential remains strong. In essence, Canada offers a stable and predictable real estate market that is ideal for investors seeking long-term growth and capital preservation. While the pace of appreciation may be slower compared to some U.S. markets, the reduced volatility and lower risk make it an attractive option for those who prioritize stability and steady returns.
The United States real estate market is vast and diverse, offering a wide range of opportunities for investors of all levels. From bustling metropolises to emerging cities, the U.S. market presents a dynamic landscape with the potential for significant returns on investment. One of the key advantages of the U.S. market is its sheer size and variety. With 50 states and numerous cities, each with its own unique economic and demographic factors, investors have a plethora of options to choose from. Whether you're seeking high growth potential in up-and-coming cities or steady appreciation in established markets, the U.S. has something to offer everyone. Another attractive feature of the U.S. market is the absence of nationwide foreign buyer restrictions. Unlike Canada, where certain provinces impose taxes on foreign buyers, the U.S. generally welcomes international investors with open arms. This open-door policy makes it easier for foreign buyers to enter the market and capitalize on investment opportunities. However, it's important to note that the U.S. market can be more competitive and volatile than the Canadian market. Prices can fluctuate more rapidly, and competition for desirable properties can be fierce, especially in high-growth areas. Additionally, property taxes in the U.S. can vary significantly depending on the state and local municipality, so it's crucial to factor in these costs when evaluating potential investments.
Section 4, Head-to-Head Key Factors Comparison. When comparing the Canadian and U.S. real estate markets, several key factors come into play. Let's break down these factors head-to-head to provide a clearer picture of the pros and cons of each market. Market stability. Canada takes the lead in terms of market stability. Its well-regulated market, robust banking system, and steady economic growth contribute to a more predictable and less volatile real estate environment. While the U.S. market offers higher growth potential, it also carries a higher risk of price fluctuations. Foreign buyer restrictions. The U.S. emerges as the winner in this category due to its lack of nationwide foreign buyer restrictions. While Canada welcomes foreign investors, certain provinces have implemented taxes to cool down the market, which can impact affordability for international buyers. Rental income potential. The U.S. generally offers higher rental yields compared to Canada. This is particularly true in certain cities and regions experiencing strong population growth and job markets. However, rental regulations and landlord-tenant laws can vary significantly across different states and cities in the U.S. Legal processes. Both Canada and the U.S. have well-established legal frameworks governing real estate transactions. However, the specific processes and regulations can differ. It's essential to consult with qualified legal professionals in each country to ensure a smooth and legally compliant transaction. ROI potential. The U.S. generally presents a higher potential for return on investment due to its faster-paced market and greater price appreciation potential. However, it's important to note that higher returns often come with higher risks. Property taxes. Property taxes are a significant consideration in both countries, but the structure and rates can differ considerably. In Canada, property taxes are generally lower than in the U.S., but they can vary between provinces and municipalities. In the U.S., property taxes are typically higher and can fluctuate significantly depending on the state, city, and even neighborhood.
Section 5. Tailoring your strategy investor profiles. The best country for real estate investment ultimately depends on your individual financial goals, risk tolerance, and investment timeline. Let's explore different investor profiles and tailor investment strategies accordingly. The risk-averse investor. For investors who prioritize stability, steady growth, and capital preservation, Canada's real estate market aligns well with their investment philosophy. Investing in well-established cities with strong economic fundamentals and a track record of consistent growth can provide peace of mind and long-term value appreciation. The growth-oriented investor. Investors seeking higher returns and willing to embrace a higher risk appetite may find the U.S. market more appealing. Targeting emerging cities with strong growth potential, such as those experiencing rapid population growth and job creation, can lead to significant capital appreciation over time. The income-focused investors, primarily focused on generating passive income through rental properties, may find favorable opportunities in both Canada and the U.S. Conducting thorough market research to identify areas with high rental demand, favorable landlord-tenant laws, and the potential for strong cash flow is crucial for success in this strategy. The diversified investor. For investors looking to diversify their portfolio and mitigate risk, a balanced approach that includes properties in both Canada and the U.S. can be an effective strategy. This allows investors to benefit from the stability of the Canadian market while also capitalizing on the growth potential of the U.S. market.
Section 6. The verdict. It depends on your goals. So, which country emerges as the victor in the great North American real estate showdown? The truth is, there's no one-size-fits-all answer. The ideal location for your real estate investment hinges on your unique financial goals, risk tolerance, and investment timeline. Canada, with its stable market, welcoming immigration policies, and steady growth, offers a secure and predictable environment for real estate investment. It's an excellent choice for risk-averse investors seeking long-term capital preservation and consistent returns. The USA, on the other hand, presents a vast and dynamic market with the potential for higher returns. Its diverse range of cities, lack of nationwide foreign buyer restrictions, and strong growth potential make it an attractive option for investors seeking to maximize their returns. Ultimately, the key to successful real estate investment lies in conducting thorough research, understanding the nuances of each market, and aligning your investment strategy with your individual financial goals and risk tolerance.
Section 7. Join the conversation, share your insights. Now that we've explored the intricacies of the Canadian and U.S. real estate markets, we'd love to hear from you. Which country do you believe offers the best real estate investment opportunities, and why? Share your thoughts, preferences, and experiences in the comments below. And don't forget to subscribe for more insightful content on real estate, finance, and building long-term